Well, thank you for staying with us. Nigeria's gross domestic product report for fourth quarter of 2021 recorded 3.98% growth year on year in real terms, showing a sustained positive growth for the fifth quarter since the recession witnessed in 2020, when output contracted by minus 6.10% and minus 3.62% in Q2 and Q3 of 2020. The fourth quarter growth indicates a steady economic recovery, accounting for an annual growth of 3.40% in 2021. The report also shows that real growth in the oil sector was 8.06% year-on-year, indicating an increase by 11.71 percentage points relative to the rate recorded in the corresponding quarter of 2020. While the non-oil sector grew by 4.73% in real terms during Q4 of 2021, breakdown sectoral performance of Q4 GDP report indicates that the agricultural sector contributed the most to GDP with 26.84%, followed by trade with 15.66% and information and communication sector with 15.21%. Well, joining me now via Zoom is a partner, Deloitte Nigeria, Mr. Taiwo Okwade. Thank you so much for your time. It's good to see you, Mr. Okwade.
Good to see you too, Tolu. Thanks for having me.
Yes, let's start up with the review of these figures. We've seen a kind of growth for 5 consecutive quarters now, but it seems to be fragile. What are the fundamentals surrounding this growth?
So you are correct. The growth seems to be fragile. If you look at the growth for quarter 4 of 2021, it's still, I think we recorded about 3.98%, which is a reduction in the growth of about 4.03% from quarter 3 of 2021. So we're seeing this fragile growth, which possibly is likely going to change in the first quarter of 2022. But even with the fragile growth, I think we need to commend the people that are running the economy, because they've done a wonderful job. If you look at the projection by the World Bank and IMF for 2021, the economy was projected to grow by about 2.7%. So this growth of about average growth 3.98% in the fourth quarter of 2021, and the annual growth of 3.4% in 2021, it's a significant increase over what the economy has been projected to record, and I think we should be happy with that. There are so many things that accounted for the growth rate that we witnessed in the quarter 4 of 2021 and the annual growth of about 3.4% in 2021. We are still, experiencing the effects of the base year. And when I say the base year, we all know that in 2020, the economy was still passing through the impact of COVID-19 pandemic, and the economic reduced significantly, and we experienced what is called a contraction, which is at the end of the day led to a recession. Now, because of the reduction in the level of economic activity in 2020, and the subsequent increase in economic activity in quarter 2 and quarter 3 of 2021, you would think that the economy is performing very well. If you take out the impact of that base year, you are likely going to see something significantly lower than what we have recorded now. But it doesn't matter, as long as the economy continues, to increase. We're likely going to see, or as long as the economic activity continues to increase, we're likely going to see the increase in economic growth going forward. And if you also take note, especially in November and December of 2021, there was increase in economic activities, especially around the consumption side. During the festive period, we saw a lot of harvesting activity. We saw a lot of household purchasing, even things that people did not need. People, had to purchase those things. This contributed to the growth that we witnessed in the quarter 4 of 2021. Unfortunately for the economy as well, even though a lot of developed economy, suffered under the impact of the Omicron variants that came out around November and December, we didn't really experience a lot of negative impacts from this Omicron variant. The economy only suffered mild effect. There were low, hospitalization, even though people did not really get vaccinated. I think around December of 2021, only about 2.2% of the population was vaccinated. But we're so lucky that the economy did not really suffer the impact of this low vaccination rates because people did not really go to the hospital. Even though people, from the information that we had, a lot of people, even contacted the COVID-19 pandemic, but they didn't have to go to the hospital because of the mild effects. But there are few negative fundamentals that are still affecting the numbers. And I believe that, when those fundamentals are critically analyzed, we'll see that if they are corrected, in the future, we're likely going to see a positive trend in our GDP growth rate. The insecurity, for instance, especially the issue of the Boko Haram in the northeast and northwest, the banditry, including kidnapping, the conflict between the herders and the farmers in the middle belt and the southeast. And you also look at the impact of what is happening in the southeast today, especially in Anambra, where people are not allowed to go to work every Monday. That is having significant impact on the economic growth. And until some of those things are corrected, we are likely going to, see this fragile growth in the economy. Federalization of the pipeline also play a very, big role. In November and December, some of the oil majors reported federalization of their infrastructure, which led to a significant reduction in the oil production around that period. Even though I believe it's something that will also get worse in 2020 because from the report that we just received from NNPC, the average daily production has even reduced further from about 1.5 million barrels per day to about 1.29 barrels per day. That is worrying for an economy that wants to grow. And finally, I think the issue of investments in the economy also goes a long way. Investor apathy, people not, bringing money into the country because of uncertainty, within the economy. So those are the things that I think are likely going to or affected what happened. The GDP growth rate in Q4 of 2021 and the annual growth rate of economic growth rate in 2021.
Okay, let me follow up now with in fact, I must thank you very much for that all-encompassing answer because you went all of the sides of that question. But I want us to now straight up focus on the performance of oil and the non-oil space. There's a lot of effort aimed at, of course, improving the non-oil sector. I said this yesterday that we'd always need oil to diversify our economy. So what's your assessment with regards to that performance? You've talked about vandalism and all of that has limited our oil space. What about the non-oil space? What more can we do?
Yeah, I think with the economy, I like I said, I think we are going in the right direction.
Okay.
The economy is being diversified. I think people look at the economy and look at, what we are getting from oil. Oil doesn't necessarily account for a significant part of the economy. It only accounts for a significant portion of the foreign exchange earnings. At the moment, the oil sector accounts for, I think, about 7% of the Nigeria economy, while the non-oil sector accounts for more than 5% of the Nigeria economy, which is good, which shows that we do a lot of activities within the non-oil sector compared to the oil sector. Unfortunately, in terms of the foreign exchange earnings, we still depend a lot on the oil sector. Like you said, at the moment, the oil sector, especially the agricultural sector, the transportation, some of these sectors that are very critical to the Nigeria economy are trending upward. They are reporting, they are expanding rather than contracting. But there are still few sectors within the economy that are not performing the way they are supposed to be performing, especially the manufacturing sector, the ICT sector, and trade. At Q4 Q4 of 2021, the manufacturing sector reported, I think, accounted for about 2.28% of the economy, which is a reduction from about 4.29% in Q3 of 2021. Is worrying. We need that sector to be performing very well for the economy to grow. And we also all understand the reason why some of these economies are suffering, the way they are. Some of these sectors are suffering the way they are suffering. The agricultural sector, which is the mainstay of the Nigerian economy, fortunately for us, is growing, and we understand why that sector is growing. The sector is benefiting from the volume of activity, especially at the end of 2021. The harvesting period, the period when people, were going to need a lot of crops, a lot of staple foods that are outputs of the agricultural sector. But unfortunately, the manufacturing sector is suffering due to the impact of forex. We know that the Central Bank of Nigeria came up with different policy around forex. The forex market, the foreign exchange market in Nigeria is supposed to be liberalized, which is, on paper, that is what you are expected to, to understand. But in practice, the foreign exchange market is a bit controlled by the CBN. You see, the country operating so many forex regime, which makes it difficult for players in the manufacturing sector to be able to access the forex that are going to be needed to buy the right equipment, the right raw materials that are going to be needed for manufacturing purpose or production purpose. So if you don't produce, there is no way that sector we grow. The other issue is the dwindling purchasing power of the consumer. Consumers are having difficulty buying because of the reduction in the purchasing power. I know as at December of 2021, the inflation rate stood at about 15.62%. This is inflation is increasing at a faster rate compared to our household income. If our household income is not increasing at the same rate, that is likely going to affect the purchasing power of people, and it's going to affect the ability of people to buy in the market. That's going to affect the non-oil sector. Like I said, the non-oil sector is performing very well. At least the share of the non-oil sector within the Nigerian economy has increased significantly in the last 3 years, especially when you compare what the oil sector is contributing to the Nigerian economy.
Mr. We know that we have a forex challenge that we've had to grapple with for some time, and it's not helping matters. Reports we have shows that the dollar exchange is for about 600 naira. That's at the parallel market, and at the official exchange rate is still around 415, 420 naira, which many see as not practicable and with the real things. But I'm looking at that drive for foreign direct investments or foreign portfolio investments at this time, because they are always divided into two. As we move to an election year, the argument is that many investors will want to sit on the fence, and cautious trading is what we understand, and of course cautious investments too. What impact do you think this would have on Nigeria's economic performance?
So I think your observation is very correct. The multiple exchange difference, the multiple exchange regime, the upcoming elections are likely going to play a significant role in the way we attract foreign direct investment into this country. We know that Nigeria, as at I think 2021, experienced the lowest level of foreign direct investment in the last 10 years. I think the foreign direct investment, fell to about, less than $700 million, which is worrying, because you want, people to, continue to bring money into your economy. If money comes into the economy, that's likely going to help to trigger economic activity within the country. Like I said, we have issue of multiple exchange rates. Investors want to have confidence in the economy. They want to have certainty around the investment that they are bringing into the country. They don't want a situation whereby they will bring investment into the country, and after maybe a short period of time. They want to take their money out. They cannot take their money out because that money has been eroded significantly, or the return that they are expecting to generate from that investment has been eroded, because of inflation or the exchange rate volatility. That is likely going to affect, the confidence of investor and their party. So we also need to work, or the federal government needs to, through the CBN, needs to try as much as possible to liberalize that foreign exchange market. We also need to work on inflation, like I said. Inflation, because the moment you bring your money into the country, if inflation is increasing and the return that you're getting on your investment is not increasing at the same rate as inflation, your money is eroded already. And like you mentioned when you were asking that question, you mentioned the issue of upcoming election. That is likely going to be a distraction, to be honest. The election is going to distract the policymakers from developing the right policy that would trigger the economy in the right direction. Like I said, we have few things that are playing to our advantage. The recent opening of the borders by the federal government will go a long way in helping to caution some of the negative impact of this upcoming election and the lack of access to foreign exchange in the Nigeria economy.
Okay, before I let you go, Mr. Okwade, we have an increased number, obviously, with reports that we see of Nigerians, and not just Nigerians, people drifting into poverty line, which is very worrisome. Now, what is your projection with regards to the inclusive growth that we talk about? This fragile growth, can it take us to where we ought to be? And if that will happen, do you see that handshake between the fiscal and the monetary side, even as we move to the elections?
Unfortunately, the simple answer is no. Like you said, the economy is still growing at the rate of 3%, 3% to 4%. Like I said before, we grew by about 3.4% in 2021. The economy has been projected to grow by about 3.4, I think 3.5% by IMF in 2022. That is still not going to take care of or be able to help people to get out of the poverty bracket. As at January of this year, the World Bank projected that about 5 million additional people will go below the poverty line in Nigeria. That is going to be about 95.1 million people below the poverty line in 2022. That's additional, when you look at that, that means that the number of people that are going to be below the poverty line will increase from about 89 million that were reported in 2020. Like I said, the economy is growing at the rate of about 3%. If we are going to have people living the poverty bracket, the economy will have to grow at the rate that we saw pre-pandemic. I'm not even talking about what you saw before 2020. I'm talking about what you witnessed between 2000 and 2004, which is about 7%. So which means that the economy will have to grow at the rate of 7%, because we've been growing at the rate of about 1.5% to 2% for a very long time, even before the pandemic. We have tracked behind population growth. When it comes to population growth, in 2021 was around 2.6%. So which, when you look at it, the average population growth in Nigeria has always been between 2.5% to 2.6%. That has always been higher than the annual GDP growth rate, which is about 1.5% to 2%. So we need to do more to be able to take or push people out of that poverty bracket. So, like I said, we need the economy to grow at the rate of 7% for the next 10 years to be able to take people out of that poverty bracket. If not, we're still going to continue to see people being pushed down below that poverty line for the next few years.
Well, it's a good way to live it, though a little bit scary. But I must thank you so much for your time. But that's the truth. Partner, Deloitte Nigeria there, Mr. Taiwo Kwade. Thank you so much for your time on the show. We appreciate this.
Thanks, Dr.